Good afternoon, everybody, and welcome to the webinar session entitled Crypto Regulation, What to Expect. My name's Sue Carpenter. I'm from Crypto UK, the Director of Operations, and I'm joined by some very esteemed panelists today to start the debate and have some conversations around the topics. Before we get started, I just need to advise everybody that this webinar is being recorded. You should have had an acknowledgement of that. And hopefully everybody on the call is happy for us to continue. And in addition, any questions that you have during the session, please feel free to pop those into the chat function. We will have time allocated at the end of the webinar to go through those questions and hopefully answer as many of them as possible. So without any further ado, I'm going to hand over to my panelists. I will ask them to do a brief intro, tell you who they are, the company they work for. And just to give a bit of an outline of the session and topics, I've asked each of them to give us maybe one or two of the key things that they will be considering as priorities over the next couple of months in terms of the regulatory landscape. So to start off with, Stephanie, can I hand over to you?
Yes, of course. Hello, everyone. I'm Stephanie Cabossioras. I'm currently the Deputy CEO of Binance France, so the French registered entity as a VASP, a virtual asset service provider. I joined last April, and before that, I was the Deputy General Counsel at the AMF, the French Markets Authority. And it is where I contributed to draft a significant part of the French regulatory framework about crypto assets that is currently in place in France and that has been in some ways exported in the MiCA European regulation. Before that, I was working at the French Central Bank, and I was a member of the French Court of Auditors in France. So my priorities for the next few months and how I see things is that the crypto environment will be will really fall into the regulation. What was initially a tech business will be totally absorbed by a financial-like regulation. All the developments that we have seen in France in the last few years and what we will see when MiCA will enter into application in 2 years in Europe is that crypto assets are considered by public authorities and by regulators like financial instruments, like traditional finance. And at some point, this environment would need to adapt itself to the high standards of financial institutions. So for me, the challenge is to implement all this regulatory framework, like in traditional finance, but also to identify the specificities of blockchain and of crypto firms, because some parts of these regulations need to be adapted. For example, on AML, the way you do transaction monitoring is really different on the blockchain because you have blockchain analytical tools like Elliptic, and Mark can speak about that. Another example about custody, the custody of digital assets is very different of the custody in traditional finance. So I will try to explain you how we have done this journey in France in the past and how we are thinking about how to implement MiCA in the future.
Fantastic. Thanks a lot, Stephanie. Mark, over to you.
Hi, everybody. Great to be here. So I'm Mark Aralai. I work at Elliptic. I've been here just over a year. I work in the regulatory team, so following regulatory updates and changes across the year, engaging with the regulators. Before that, I was 25 years at the FCA, so slightly similar to Stephanie in the Financial Conduct Authority on the UK side. I was primarily doing policy, left FCA doing markets policy, but I also was involved or responsible for the crypto asset changes to the money laundering regulations now a few years ago. I work for Elliptic, as I say, and Elliptic is a blockchain analytics company. Blockchain analytics company basically is a company that has tools and data that helps companies like Binance and others like exchanges, as well as custodians, law enforcement and regulators to use the data that we have to assess financial crime risk on the blockchain. Where do I see things happening? Well, I think it's finally here. It's now all the regulations going to hit us. So it's how do I avoid a headache? There's so much to ingest right now. We have a multitude, and I'll leave Manuel to go through it a bit later on. But I think we've been asking for it, but it's all come at the same time. So I think it's about taking time to understand what the obligations are going to be looking like, whether it be RTSs from MiCA or the Treasury, and then the FCA or VARA that's come out with stuff as well. I think also for me, it's because, and that's part of the fragmentation that's been created because of all this coming. There's no harmonization as yet. Understanding where the gaps are, most firms will apply the highest standard, but also waiting for things like IOSCO towards the end of the year. And I think because of regulation coming into this space, I think more TradFi are starting to, if you like, take heed and listen to see what's going on. So we're having a number of conversations with TradFi, both probably in the custody side, but just generally having education in terms of how things are going, but also working with regulators. I think that's where regulators are still not fully engaging with the blockchain data. So the UAE is, but there's a number of other first tier Western regulators that are not doing so. So part of the role is to walk around Europe and MENA to actually try and explain how can people supervise using this blockchain analytics, as well as look at it from financial crime risk.
Fabulous. Thanks a lot, Mark. And Manuel, over to yourself for an introduction.
Thank you, Sue. Hi, everyone. So my name is Manuel Fajardo. I lead the digital assets practice at Plenitude Consulting. I joined last summer, so it's also very recent, like all of us here. Before that, I was not on the regulator side. I was mostly on the other side, on the regulated ones. I spent 15 or 16 years working with major global investment management groups based in France or in the UK or in the US, but usually in positions with a global remit. So that meant, implementing, global regulations, trying to find what is common between them, developing, robust compliance programs when it came to AML, sanctions, financial promotions, global procedures. And then eventually, I bet my career on crypto, and I decided to come over to Plenitude to develop the digital assets practice. And basically, my focus for the next years is to keep, developing this new practice, which basically means kind of acting as a little bit of a bridge between this, the TradFi heavily regulated world and, the crypto world, which is starting to understand and discover what it feels like. So, so when it comes to advising our clients on the crypto side, basically, saying, okay, what do these regulations entail for you, assisting in the implementation and how to incorporate best practices from the traditional sector into what they need to do. But also when we're talking to the other side of the bridge, which is TradFi firms, then, trying to demystify crypto, trying to say, look, we do have some tools for risk assessment, for risk management, for evaluation. Now try to understand the risks of crypto and see how you can apply this to this and develop a crypto strategy. So we're going to keep working on that. And of course, throughout all of this, engagement with industry associations, regulators, to try to see how we can still shape this nascent regulation.
Fantastic. Well, thank you all. That was a great introduction. So we now all know who we have on the panel. I think Mark touched upon this. It's been an incredibly busy week in terms of regulation within our sector. And we've probably got a lot more to talk about than we did when we started planning this session a good few weeks back. I think to get started with some of the detail, obviously we are seeing a lot of consultations and papers, both from the UK, but also across Europe and globally. I think it's going to be really helpful maybe to drill down a little further into some of the details and possible implications. Ideally, I think, Manuel, it'd be great if you could start by giving us a global picture of what we're starting to see emerge in other markets and potentially how that's going to impact what's happening here in the UK.
Sure. So I think that, what we see is that, that the global and the local kind of move in tandem. You have some of the same topics and narratives, where it comes from international organizations or from national governments. And, so, I guess that for convenience, I'll break it down in 4 main buckets, if you wish. So the first one is really where we are today, which is the financial crime one. And basically that mostly means AML and sanctions. And basically, you can trace that back to 2018, when the Financial Action Task Force started to publish their first guidance and coining the terms of virtual assets and virtual asset service providers, and clarifying then that, that they had to be subject to AML frameworks, they had to be subject to licensing requirements, they had to be subject to the travel rule. And we have seen steady progress in countries adopting that into the rules. Back in 2018, the Library of Congress had said that there had been like 33 countries that had subjected crypto to AML. By the time that they did the exercise 3 years later, there were 120. And nowadays, I guess that you would be very hard pressed to find a country that doesn't apply AML to crypto. So that's kind of, the minimum where we are today. Pretty much every country is there, whether they have a fuller framework or not, that's where they are. And it's interesting that, it's so advanced that we have now moved to the enforcement phase. So when it comes to AML and sanctions, we already have started to have a body of precedent with the Bittrex and Kraken and Coinbase cases in the US, with Bicep in France that got stripped of their license. So we're starting to see, how regulators are saying, look, this has been around for a while. Let's move to enforcement. This is what it means. The second bucket is what we're seeing a lot of movement on, especially this week, the fuller frameworks. And it's basically the expansion of the obligation from just AML and sanctions to financial promotions, client money, governance, risk management, cybersecurity, all of these things that, that means that basically it's going to be a big convergence towards what is already applied in TradFi. So you see all of those common factors. You also see them in the FSB recommendations on how to regulate crypto assets. And you encounter them in MiCA, you encounter them in the UK consultation, you encounter them in Dubai, with what they published yesterday. And I like to think that most of it is common, but you see emerge little differences. So, whether it's new legislation like in the EU, or whether it's extending existing legislation to new activities like in the UK, whether it's creating an ad hoc regulator like in Dubai. But the main message is that, it's full compliance frameworks. The third bucket, I think it's stablecoins. They are a strand on its own because it's a different type of product with its own different risks. And there again, you see kind of, the international and the local moving in tandem. So you have IOSCO saying that, that stablecoins are a financial market infrastructure, and we have to be mindful of the repercussions for the wider system. We had FSB publish recommendations at the end of 2020 and revising them at the end of 2022 to account for the fallout of Terra Luna. And there again, you see common themes: governance, risk management, etc., but with stablecoin specifics like redemption mechanisms, wind down mechanisms again, reserve requirements, etc. And you see those translate into what we see locally: the proposed bills in the US, what we have seen in the UK consultation on stablecoins, the EU in the provisions that you have in MiCA for stablecoins. And then again, you see a slight difference. And I think that one of the most important is around the algorithmic ones, because you go from, positions like a ban, like what Hong Kong announced last week, to the UK saying, no, it's fine. It's just another unbacked crypto asset. So it's also interesting to see that there's a common trend, but also difference. And the fourth bucket is the difficult stuff. It's the stuff that, that we still don't know how to handle yet, because, it's, we don't have a clear point of entry, who do we regulate when it comes to DAOs, when it comes to DeFi. And I think that there it's wise that, that regulators have taken the approach to call for evidence and to say, okay, let's try to figure this out. Because I think that that's where the same risk, same outcome principle starts to not quite work. We have to be a little bit more mindful of how it's not exactly the same of what came before, and it would be an error to just say that we copy paste like we're doing with the other activities. So it's still falling into shape, but I think that those are the kind of the four main strands that we see today.
Fantastic, thanks, Manuel. And I think just taking all of that and trying to bring that into, I suppose, a little closer to home, Stephanie, this would be a really good point for you to be able to step in and expand on this. Obviously, you've been doing a lot of work across Europe, and more specifically in France, in terms of shaping the regulatory environment. It'd be great to hear about the work that you've been doing, and obviously some of the key issues that you've faced there, and how that could obviously be impacting what happens here in the UK.
Yes, of course. I can share my experience as a former regulator on how we built the French regulatory framework. And I can also share my experience of regulated entity about implementing this framework. In France, France was a little bit an early mover on these topics because it started in 2018. The first crypto players came to see the regulators asking under which regulatory framework they were positioned. And at that time, crypto was not regulated neither in France, in Europe, or worldwide. And at that time, the AMF had done a public consultation asking for people, do you want still not to be regulated? Do you want self-regulation? Or do you want a proper regulation? And surprisingly, most of the answers were in favor of regulation, because at that time, serious projects wanted to differentiate themselves from scams, other unknown projects. So that's how it started. But the problem we had is that it was very early in the regulation, so we didn't want to create something too stringent, because it would have shut down all innovation in France. So that's how we moved with two steps. First, there was a mandatory AML registrations. So the VASP registration that Binance France currently has is only for AML. It's the application of FATF recommendations and also of the 5th AML directive in EU. So it's just a registration, but in France, you have an a priori review of the application file by the local regulator, by the ACPR. So people have already normally a first review of all the paperwork, all the policies, and including the governance. So this was the first step, mandatory. And then France proposed a second step, which is a VASP license, similar to an investment firm license. So it was AML plus investor protection, plus governance, plus policies. This license was designed to be optional in France. So this was really the innovation of this framework, is that in 2029, when it was adopted by the French Parliament, everyone had the possibility to be licensed as a VASP. So it was quite competitive, because compared to other EU countries, you had the possibility to innovate, but it was not non-mandatory. And the first step in France were for all the VASPs to be registered. So currently in France, you have around 50 VASPs that are registered by the AMF. The first application files for the VASP license are currently being reviewed by the regulator, but it's a smaller portion. And then when the reflections about MiCA started in maybe 1 year ago, finally the European institution took like the VASP license, which is really similar to a MiFID license, and now the CASP regime that we have in MiCA, crypto asset service providers, is very similar to the VASP license. The main difference is that it's mandatory. So it will become mandatory when MiCA enters into application in 2 years. And there are more obligations about market surveillance, market integrity, etc. So this was how the regulation was designed in France, and it enabled the French crypto sector to grow and to adapt itself to regulation. So now on the other side, to implement all that, Binance France got the VASP registration last May 2022. It was the first international big platform of crypto assets to be registered in France. And so the work and the consequence for maybe anyone in our audience is to put in place a proper governance, similar to a traditional financial institution, to put in place all the bricks, all the buckets about AML. So have a proper KYC procedure, the same for corporates, have an EDD process which meets all the higher standards like in a bank. Put in place a transaction monitoring, and it's really something complicated, something a little bit different for blockchain. And the main consequence for a registered entity is that at the end of the process, you need to submit suspicious activity reports to the FIUs. And it's really the big difference when crypto asset players are registered is that there is an official link created with the FIU. We have opened an account in the platform of the FIU to submit the suspicious transaction reports, etc. So it opens a whole new area of cooperation for a VASP with public authorities, with law enforcement as well, because more and more the law enforcement, and at least in France, are specialized in crypto activities, in cybersecurity. They know how the blockchain works, and they can rely on VASPs to conduct their investigations. So on a day-to-day basis, what the VASP registration changes is that the VASP is now connected to all the public authorities and integrated in the broader AML framework.
Fantastic. Thank you so much, Stephanie. There's been a lot of work going on there. You've been involved on both sides. So you've got a really, really unique perspective, I think, in terms of the regulatory landscape. Mark, I think taking all of that into account, and here's the big question for you, how do you think that what's happened globally, what's happened in Europe, and obviously the recent announcements we've seen here in the UK are going to impact the future of regulation in the UK? And predominantly maybe looking at the approach of the UK government from the consultations that have come out and some of the potential implications and learnings from MiCA?
It's rosy. No, but I think so, because there's a question in the panel as well, in the chat, and I think that so there's two big changes that from the UK perspective. The first one actually is probably for me one of the most significant ones in terms of the Section 21 financial promotion changes. So the section that what the government was going to do was to amend the Financial Services and Markets Act. Section 21 was about financial promotions, that made a crypto asset financial promotion a promotion under the financial promotions regime under FISMA. The difficulty was they weren't changing the activities to go along with that, and therefore crypto firms, as you well know, Sue, wouldn't have been able to really approve it. There was hardly any. And I think Crypto UK, other trades, but also industry and your members all, stood up to that difficulty. If you say on one hand you want to be a crypto hub, but you then actually say to approve your financial promotion, it'd have to go to a law firm that's duly authorized by the FCA. It just didn't actually make sense. So they did a U-turn with the latest update. And I think that shows a lot actually in terms of the legislative desire to make the UK a crypto hub. So I think that's an extreme positive. The FCA came out subsequently and a few days later to set out what that meant. And I think it's a good thing. So when I was at the FCA, I was supportive of the changes to FISMA, because what it does, it means if you're a third country marketing into the UK, the distinction between the UK regime and MiCA, you don't have to be established. So you can market in quite freely, but you need to be an authorized, get your advert approved by an authorized person. So it does mean that investors are protected now in a better way. But if you have a UK registered crypto firm, that's the carrot. Why come to the UK in the first place? So that's the carrot. So I think that is a fundamental positive. The other thing that came out was the broader kind of conduct and prudential regulation, which sets the standards. Now, I think that's positive, but it was really a reflection of we were falling behind MiCA, and the fallout of FTX was actually leaving investors in a space where there wasn't adequate protection in the UK. So I think that was a necessary leap forward. It's come out quickly. The aim is to develop this quickly. So again, it's very positive. What does it look like? In essence, it's hard to say because it covers the right areas. MiCA covers the right areas. The benefit that the UK has is that this is sort of a framework document. We don't know what's in the middle. FCA will have to put the content into that. And I think the devil will be in the detail, both with MiCA and the regulatory technical standards and implementing standards, as well as what the FCA comes out. That's the sort of, does it create, and this is the fundamentally difficult challenge for a regulator, it's how do you create an environment of a rule book that gives vires and certainty for regulators to take enforcement supervisory action, but you don't kill innovation. So there's flexibility. And I think that conundrum hasn't, as I can see, hasn't really been addressed by any regulator as yet. So I think that's the next phase. I think the other thing to say about the UK regime is, fortunately, for them, they came out after MiCA. So their benefits are coming out after MiCA because, there's an element of first mover disadvantage. And so what the UK can do is look at MiCA and see what are the elements, and it's mainly around the edges. It's not fundamentally anything different. What can be improved? And that's more on the technical level. But I think, I'm hoping that we'll see this as a very good positive first step moving forward from regulation. I think the difficulty is, as I said, they're all coming out at the same time. So Dubai's come out with Dubai Mainland, which is Dubai VARA, Virtual Assets Regulatory Authority, come up with also a very interesting and good regulatory environment. For them, it's a slightly different challenge. It's actually quite advanced compared to some of the first tier Western regulatory environments. But the question is, how are they going to supervise? How's the regulatory expectation? You know, how they're going to enforce against it. So it's only a first step of a story, but at least the story, somebody's turned the page and the story started, if you like. So I think it's interesting. Yeah.
Excellent. Before we do move on, because I know the next section we're going to look around implementation, there is a question that's come up in the chat, and obviously it's quite timely based on consultations that came out yesterday, is obviously around the introduction of the digital pound, the CBDC. Any of the panelists, I mean, I'll open this up to any of you to kind of chip in. Do you have thoughts on whether it's needed, whether it falls within the scope of some of the other work that we're doing, or generally, I mean, what are your thoughts based on that consultation yesterday?
So for me, in terms of the CBDC, the question looking at it from a regulator, what's the market failure you're trying to address? And I also would say there's a distinction between a wholesale CBDC and a retail CBDC. So I think there's a really strong case for a wholesale CBDC. You see that even in Singapore, making that distinction and saying, let's press forward because you have instantaneous settlement, you avoid counterparty risk. So that's clearly a useful value. Retail CBDC is slightly trickier because it creates other risks, because it creates, if you like, the disintermediation of commercial banks. How do they make profit? How do they actually drive revenue going forward? You have a single point of failure, because if some bad actor wanted to take action against the UK, you could suddenly shut down the whole monetary system. So it's always going to be run alongside normal money, which I think that's what it says anyway. But I think it's a positive thing, because I think, you know, the US will say we need it to maintain US as a trade currency. The UK, it's not quite clear, apart from we don't want to be left behind. I know Europe is coming out with a Euro CBDC, and the majority of central banks are looking at it. I think what was interesting was that we're talking about 2030, so it's still quite a long distance away. So it's a lot of evaluation. It's probably a lot of looking around and seeing what others are doing. Particularly, I think the US in terms of what it intends to do, and the EU as well. What's it going to do in terms of Euro CBDC? I think that challenge is there. I think it's a good idea. I don't think it removes the need for stable coins, because I think when Manuel talked about DeFi, and I think stable coins has its own kind of cross-border kind of opportunity to be used. CBDCs are fragmented because of jurisdictions until they decide how they're going to use it on a cross-border basis. It can be resolved, but that's the fundamentals. That's my thoughts anyway.
Now that reading this speech that they made, there are some interesting things that they mentioned that there's no exclusive, that having a CBDC that excludes stablecoins, and they talked a lot about interoperability, for example, and the two coexisting. So that's welcome. They also mentioned the privacy part, and they mentioned that there would be no visibility on the part of the bank over the transactions of individuals. It would be very similar to what we have with banks today. The intermediaries and the institutions that would be handling the wallets that will have that visibility, but not the central bank. So that's also useful. They also mentioned that they would not be using it for remuneration, giving it interest, positive or negative interest rates. So you avoid that confluence of fiscal and monetary policy, which I think is also kind of a welcome sign. So there were some good noises. There's still things to be defined. They don't know yet if they're going to use DLT technology or not. That's a technical point to be discussed later. But I think that they stroke some of the the good notes. That are some of the things that worry people about CBDCs, with reason, which is the point about privacy and how far will the central banks start to intervene in.
Maybe my thoughts on that is that, as Mark said, there is really the key decision is to make it either a wholesale or a retail CBDC. And the other challenge is the timing, because currently the crypto markets rely a lot on stable coins, mainly stablecoin dollars. But the timings of this central bank's initiative is not the same. In Europe, so a public consultation has been issued on the digital euro. Now there are some tests performed by several central banks in the pilot initiative. But the time of developing and implementing all the technical part will take several years. So voilà, the decision that we take today will have an impact maybe 3 or 5 years later, and it needs to be flexible enough not to disturb the market and not to create not cause any problem to financial stability in the crypto markets.
Fantastic. Thank you all. So yes, I guess moving on to the next stages, there's a lot of things that we've covered there across both of the sections that we've talked about, and a lot of areas that really need to be considered. So I think one of the key questions that probably our audience have here is, how does that work? How do we actually move towards implementation, and what are some of the key challenges and next steps that organizations and regulators and the government need to be thinking about as we actually move towards theoretical consultations into practical implementation for businesses as well? Stephanie, I think obviously given the conversations we've had already, it would probably be a really good place to start with yourself.
Yes, of course. Maybe I can share with you some thoughts that we are having about MiCA, because I'm analyzing MiCA very closely to see how we can operationalize all this. And just to give you an idea, the framework is very similar to the one of an investment firm. What you need to provide to have is a governance like a traditional institution, so directors, shareholders, board members, etc. In order to be regulated, you need to have financial forecasts, an idea of your business in 3 years. You need to opt between insurance or own funds, and the MiCA regulation explains how much own funds, how it's calculated, etc. So it's a significant step, at least in France, for VASP that are registered to get a MiCA license. It's a big step, and in terms of money, because you need to add own funds that are not required currently. You need to have sufficient human resources, and so the substance of the regulated entity will be looked closely by the regulator, like for traditional finance. You need to have a very strong IT architecture, and the regulator will really see that, analyze it, and challenge it. You need to have internal control mechanisms, so a whole internal control setup, and also internal audit. We need to provide a business continuity plan. The IT and cybersecurity requirements are really strong. At least in the French license, it's a lot of policies that you need to provide. There's a possibility by the regulator to ask for certification by an IT provider, which is itself certified by a public agency. So it's really quite strong. And in MiCA, you know that at some point, the DORA requirement we need to be implemented. DORA is the new regulation about IT, cybersecurity testing that will apply to traditional financial institutions and also to VASPs and CASPs. Several policies need to be developed, conflicts of interest, complaints handling, there needs to be transparency on fees, all the relationships with the clients need to be contracted. You need to have contracts for custody, for all the product services. There are obligations about risk warnings. The perimeter of the regulated service should be clearly defined. So all the regulated services should be defined, and you need also to precise what are the other services that the CASP provides if they are not regulated as well. So it may be a challenge for some CASPs, because a big range of products usually is offered, NFTs, crypto products, a lot of things, fan tokens, etc. So each product should be analyzed in regards to MiCA to see if it falls under one of the services that is regulated. For the application, you need to describe the risk management procedures, the market surveillance, and for MiCA, there is a whole chapter applying to that. There will be also a focus on outsourced services. So the framework is the same as for traditional finance. is the same. The same policies apply, outsourcing policy, etc. And then you have obligation per service. So for example, if you offer custody service, you need to provide a custody policy, which is new, it's MiCA specific. There is no RTS yet, no detailed guidelines. So still under scrutiny, we need to see what the ESMA will come with that. There are provisions about client information on the custody. And of course, there is the obligation to segregate clients' assets from own funds, from a company's fund. So this obligation is quite easy in traditional finance because it's books and records from a bank. But for a crypto firm, it's very different because you need to have segregated wallets on chain. So it's not how traditional crypto firms operate. So something needs to be thought to come up with one setup that can be MiCA compliant. For services about buy and sell, crypto fiat and crypto, CASPs need to produce a non-discriminatory commercial policy, a best execution policy when it applies, and there are pre-trade and post-trade transparency requirements. For the trading platform, if you operate a trading platform, it's very similar to an MTF. You need to provide a rule book of the MTF explaining how the trades work, how can you provide the service. And the order book, there are specific requirements about the order book, the publication of the orders, pre-trade and post-trade transparency. So you see all this wording is very similar to traditional finance. The challenge is to apply it to structure that are not used to it. So there is a question of education to compliance, to TradFi, etc. And the challenge is to adapt it to some specificities of the blockchain environment, including, for example, the safekeeping of assets.
Fantastic, Stephanie. Well, in a nutshell, there's a lot to do then in terms of implementation.
Yes, as an example, just to give a flavor.
Have you had a holiday, Stephanie? That's the question.
Mark, at that stage, let's hand over to you and see what your thoughts are. Obviously, similar challenges, similar question, but how do you see the implementation process working, and what challenges do you think the industry faces?
So I think a few things. So clearly from what Stephanie says, there's a lot of work to do. And if you think historically, regulation starts with conduct of prudential and financial crime, AML fits within it. Here we've gone the reverse across Europe and globally in the main. And therefore, I think regulation is always a barrier to entry. So clearly, a sole trader is not going to be able to do all the things that Stephanie was saying. It's just going to be very, very difficult in terms of market entry. So I think there's going to be a difference. And the challenge will be for the smaller firms rather than the larger firms who've got people like Stephanie and the resources to do that. But the small, medium firms will be the ones that will be challenged. I think it's a challenge for regulators as well, because some of them have not necessarily wanted to be in this space, but they've got this space. And the question is, how do they get their skills, knowledge? How do they supervise? It's different. And what's my techniques? And they will go to the traditional finance, but they've got data. How do they use it? Do they look at systems and controls? Do they look at the underlying data? So your regulatory framework, regulatory supervisory oversight has to be thought through. And I think there are different supervisors doing different kind of views. We were at one of the discussions of global regulators that met, and it's really interesting that they are starting to think about how should supervisors be doing this. I'm not saying they are doing it, but at least the discussion has started. And I think with regulation, I think the two things that jumps out to me with regulation is that actually, even though we're covering the right bits, as Stephanie says, we're not actually, from a regulator perspective, just taking market manipulation. When we look at traditional equity market manipulation or the surveillance of it, regulators play a part in clean and orderly markets. But in MiCA and the UK approach, it seems to be a question mark as to, actually, I'm going to leave it all to Stephanie. She's going to do it all, and she's going to tell me when it goes wrong. There's no assessment by the regulator. Now, that doesn't seem the right balance of approach. And also what it means is the regulators they're still keeping it at a distance. And I fully appreciate there's a cost to ingest the data. There's a cost and resource for the regulator in terms of doing that surveillance. And it's tricky to do surveillance and market manipulation because we're talking about a globally traded asset, not a jurisdiction or EU27 jurisdiction. It's globally, so it can be basically manipulated at a distance. So there are lots of challenges, and I still think that it is still a starting point for this. And I think there's a lot more to come in terms of understanding, education, and harmonization of approach, if you like.
Excellent. Thanks, Mark. That's really helpful. Manuel, handing over to you. Obviously, you have a different viewpoint on this, and you can come at this with a slightly different angle, but it'd be great to hear where you think some of the biggest challenges are, particularly around sort of the compliance areas as well.
Yeah, I think that, again, I think I'm going to use that various buckets approach, because I think that, how the road ahead looks, it's going to depend on where people are on that road. I think that, you have, again, first bucket would be, those CASPs, SANs, VASPs that are already, subject to a financial crime obligations. And basically for them, it's more of an expansion of scope, as I was saying earlier. So, so you have kind of, this focus, okay, AML and sanctions, and now you suddenly have to think of all those other topics. You can leverage on some what has been done, because basically if you have a process in place for governance of a control framework, with risk assessments, with policy and procedures, with training, etc., it's easier to kind of, expand that, and redo your risk assessments, try to cover all of the other parts of your business, and then, start from there to build the policies, the procedures, the controls, etc. It will mean also, that, the mindset of the skills of the people that they have in their compliance departments will need to change, because, you go from having financial crime specialists to having more like, people that need this holistic view of compliance. So they're have done part of the trip, but there's still a lot that is missing. I think that for VASPs that are earlier in that stage, that are still going through the registration process or thinking of doing it, I think that it makes sense to kind of start approaching the thing with everything from the beginning. I think that even if that fuller framework, the FinProms part, the custody part, the governance part, and all of that will start to apply only later, it makes sense to anticipate and front run the regulation, because it makes sense to build a solid foundation for a compliance program from the beginning than just starting to have bolt-on pieces afterwards. And I think that, it can represent also a little bit of an advantage for companies to say, okay, I'm ready from the get-go. I already know, because we cannot say that we have not been warned. It's the writing is there on the wall. We know we see it in MiCA, we see it in the UK approach. We see the topics that have to be covered. So starting to build that kind of project management from now makes sense, because it's, as Stephanie said, it's a lot of work. Building a full compliance program is a lot of work. TradFi firms that are branching out into crypto have a different thing, because basically they do have that framework. They have the traditional finance compliance programs in place. For them, it's more of a matter of understanding where do the risks of their activity manifest slightly different in crypto, or where do you have slightly different risk mitigation techniques because you have blockchain analytics tools, for example. So it's kind of transplanting the way of thinking, of assessing risk, of the governance to those new risks. But I think that they have it a little bit easier because, they are already used to operating in a very regulated environment. And I think that the last bucket, again, the difficult stuff, people that are building DeFi projects or, infrastructure for DAOs and those things that are still not caught within the existing regimes or the ones that we have in the horizon, you still kind of get a feel of the direction which the wind is blowing. It's difficult to conceive a world where DeFi wouldn't be subject to AML requirements in some sort. So, starting to try to incorporate that into the design of the products makes sense, because it's going to come in one shape form. I think that insofar as that discussion is still very nascent, there's still a little bit more room to try to convince regulators of how we can leverage technology to do things smartly, to say, okay, hey, we have this thing called zero knowledge proofs. Can we do AML using that rather than, than collecting documents, for example. Could be a way of doing things, but it's so useful to start kind of reading the tea leaves and anticipating, the which things are, to start developing those DeFi products, with future regulation in mind.
Maybe if I may, 2 points.
Please go ahead, Stephanie.
I don't want to frighten anyone. This is the target of regulation, but we have time to go there. At least in Europe, we have at least 2 years until MiCA gets implemented. And in the UK, I understand things are going on, but it's not stabilized yet. So it's more a target. But the important message is that everybody needs to be conscious of that and be prepared. So this is the message I'm conveying, and at least in France, is that in France, people can already apply to the VASP license, so the second level, which is optional and very similar to MiCA, because then when MiCA will enter into application, it will be very easy to convert this French VASP license to a MiCA license and to benefit from the passport. And it will also give time to candidates to adapt to the expectations of the regulator over the next 1.5 years, 2 years before MiCA enters into applications. So really the key message is to say, be prepared. This is what is coming, but people have time to adapt. And on DeFi, I don't know if you want to open this discussion now, Sue, but I will have also some thoughts to share.
We have some time still, Stephanie, so please do. I think it's a valid point.
On DeFi, what I see is that my analysis is that this market is not mature yet. I've checked some key figures, and Binance is publishing figures on the market shares of DeFi compared to CeFi, compared to TradFi. Everything is public. You can go on Binance Research. And what I see is that this market is really small. It has diminished with the bear market. So for me currently, there is no systemic risk, and there is no connection between TradFi and DeFi that would cause a systemic risk. So my personal opinion on that is that the time of regulation has not come, and we have seen in MiCA that DeFi has been excluded from the scope of MiCA. There are some reflections about that. But for me, the most interesting thing would be to create observatories of DeFi and monitor the figures to see if the phenomenon grows and normal people are more exposed to it. Maybe think about regulation, but about innovative ways of regulating. Like Manuel told us, we can think about innovative ways to apply, the KYC, see how the KYC of regulated entities can apply to DeFi to smoothen the impact of regulation on DeFi.
I think that's a really valid point as well, Stephanie, that actually, it's about looking for innovative ways to apply some of this, because, the very nature of the sector and the industries that we work in is that it's full of innovators and people who are looking for ways to be able to find better solutions to the problems that we're facing as a sector as well. Before we move on to the Q&A, Mark, Manuel, was there anything else you just wanted to add just based on the comments that Stephanie made?
So go on, Manuel.
Please, Mark.
Before we fight over it, I sort of agree and disagree with you, Stephanie. So I think the whole market has shrunk, and therefore DeFi has shrunk. I got into this market because I saw the value of the technology is not the Bitcoin trading, but the value of the technology. And I think that value can be seen in data in terms of digital identity, but also in decentralized finance. Is it here? No, it's still a long way to go, because, even we would put out reports saying it's about fraud and about the poor coding that's still there. But disintermediation of transaction, it must be where the financial services are going to go to next. Whether they get there in the 1 year, 2 years, 5 years, 10 years, who knows? But clearly that's a better way, if we can get there in a safe way, that will produce better results for investors, give you 24/7 trading, lots of things that come from it that will be there. But I agree with you that, we need to monitor it. And there are some regulators actually doing work on this and trying to do proof of concepts, trying to work out what is regulatory expectation look like in that space? There's still early days, but I think same with the EU. The UK has put it in the, as Manuel says, the too difficult bucket, and we need to see how it's going to work. But I think it's balancing that. We shouldn't be killing off DeFi by creating a framework, a regulatory framework that's too rigid. We should allow it, but at the same time, it's still got a bit of robust regulation, and it's got to have investor protection and market integrity, and all those things come into play.
Manuel, would you like to expand on that?
Yeah, I think what I thought is, something that came up was a lot was education. I think that, that's key. And it goes both ways, in the sense that you say, yes, there's some time to implement some of the stuff that is coming, but basically, to implement it correctly, I think that the first thing is to understand what it entails. And, there's a lot of, learning and understanding that has to happen at the point of crypto firms to say, okay, what does this mean? Because, it's new. I think that another part of education is that of regulators, and I think that that's where we as an industry have a big role to play, saying, look, you keep saying same risks, same activities, same outcomes. Good. But DeFi doesn't have the same risks. You have different risks than the ones that we have in TradFi. So, you cannot just do this thing. I think that there was a very interesting question in the chat about, where does that leave crypto? Because basically, yes, one of the USPs of crypto has been, this thing, okay, it's decentralized, you don't have intermediaries. So is it going to, we're going to just create the same thing? And I guess that, if we manage to get this right, if we manage to get that message across and, and do the proper education of all stakeholders, we may be able to get some convergence, but some convergence that still leaves us better off, in the sense of saying, okay, TradFi may converge towards crypto in the sense that, you will be using better rails, better, settlement, finality, etc. You're going to be able to gain all the advantages of crypto. And yes, DeFi may not look like what we have today, which is just completely peer-to-peer, etc., but you will be able to converge to some level of consumer protection. And if we manage to leverage the technology to still reduce risks, but using this new technology, we may still be better off by gaining on customer protection, but still not losing completely that ethos of decentralization that makes crypto so special. So, I think that there's still a lot of, I'm an optimistic, and I think that, we are still early enough so that we can still shape that conversation and make that scenario happen.
Fabulous. And I think we've done a fantastic job, as we've been going through, of answering pretty much most of the questions that have been posed to us during the webinar. There's still time, so if people want to put any more questions in, please do. I think I'd like to ask the panelists, just in terms of expanding on the point that Manuel made there, when we touch upon the area of regulation in crypto, and obviously the reputation that the industry has had and some of the issues that we've faced over the last few months, how do we balance the implementation of regulation and the ability to not stifle innovation and creativity within the sector? And is there anything you think we should be focusing on in terms of those two issues and how we balance that out? And I'll open that up to any of the panelists who want to step in.
So I have a strong historic view in terms of the rule book or the handbook of the FCA and how it's constructed. So I think this is the point I was trying to make earlier on. Europe has their normal legislation, and then level 2 that would come through, and the FCA would have its handbook, and then it may or may not have guidance, but it's relatively rigid. And sometimes for good reasons, because you want VIREs to take supervisory and enforcement action. I think for me, the FCA has to go back historically to when they used code of conduct as well. And finding that balance means an effort. Whether they do that or not, I don't know, because it creates risk to the regulator. But it should be, for me, a balance of principles-based regulation, detailed rules where you need VIREs to take enforceability, supervisory, but then codes of conduct where you are a little bit looser, but you enshrine those into the handbook. So they're not free on their own, but you have oversight as a supervisor. That flexibility, I think, is really important, that we don't start to, there will be a little bit of killing off of the innovation, let's be clear, but you don't really want to kill it all the way out, as we talked about DeFi and all these. How can it be done in a proper way? And as Manuel says, I agree with him, that it won't be as we see it now. There'll be a level of control and KYC controls that we're already seeing it within projects. Actually, it's not fully decentralized. There's somebody getting involved to do a level of KYC, KYT, before you get involved with the liquidity pool of the DeFi. So I think, yes, it will change, but I think the big challenge is regulators setting out regulatory expectation and having a handbook that is flexible, but at the same time, providing them with enough vires to take enforcement and supervisory action.
Thanks, Mark. Does anybody else want to step in there? Stephanie?
Yes, I agree with Mark. For me, the real balance is in the interpretation of the regulators about the texts. The text are what they are. Then there will be level 2. But really, the key to all that is how we interpret it. And the regulators that know about blockchain, know the blockchain environment, know the ecosystem, have the ability to rely on professional association if they have questions to see what is the mood of the market, what is market practice, etc. This will really be key into not killing innovation. Because if you have a too strict interpretation of the text, or if you put the traditional regulation in crypto, it doesn't work. Even AML, it doesn't work. So there is really a work about regulators to have staff, skilled staff, and willing to spend time and investigate this new feature of regulated markets.
I think, sorry to just jump in there, Mano, I think absolutely right, but that's where it's going to be difficult because regulators aren't in that space yet. That's the problem, because they don't want the risk and the hazard for themselves. So they just impose the traditional rules and create their environment, unfortunately.
There is another question that's come through, which we've got time to cover off. I'm not sure who wants to take this on the panel, but we've been asked about where regulation sits in relation to digital asset custody. Anybody have a view on that?
Yes, I can tell you what is the framework in France and also in MiCA. This service of custody is qualified when first you have the private keys, so you have the possibility to move the assets on the blockchain, and that you keep a record of position somehow, saying that each user has this amount of crypto assets. So these two elements are really the legal qualification of the custody service. And when you are qualified as a custodian, you need to apply all the rules, so custody policy, client information, client protection, etc. And the most difficult part is the segregation of assets on the blockchain. So you need to have segregated wallets between own funds of the entity, all the fees that Vast collects, etc., and the client's assets. So there needs to be like a reconciliation between the movements on chain and the movements in the ledger of the CASPs. And this is really a business change, because from what I know of the crypto environment, exchanges or other entities don't work like that. They have omnibus wallets, omnibus accounts for all the assets that they manage. So it indicates technology changes, architectural changes, but also it has an impact on fees, because each time you move assets on chain, there are gas fees. So voilà, all this needs to be thought.
I just echo what Stephanie says. I think, so yes, digital asset custody as an activity is fairly clear, but what comes with it is segregation. And as Stephanie said, is in the UK and in Ireland, we'll have trust law, and in Europe, you'll have a contractual obligation. You can have an implied trust, an express trust, or legal separation. So Dubai FSA is looking for legal separation. You have a separate custodian that does it, but then you have the issues, as Stephanie says, in terms of gas fees, moving things around all the time. That's why exchanges have usually dealt with it through books and records in the main. I think the other thing, though, that draws distinguished, I think at the moment is, so MiCA follows because it is the European acquis, and that's the style of making law in Europe. The sort of the liability point from which came from AFMD, proudly was involved with that, and then he went to UCITS, and now it just carries on because it is the acquis, and there is therefore a liability of loss, and it's fairly high standard. It's not clear whether the UK will follow that standard as yet, because that's not quite there. So they are marginal issues to say, and the issue around custodians was, if we are responsible for loss and there's actually a very thin margin and profit to be a custodian, what am I doing here? When you look at traditional equities in that space, so how does that work in this space? I'm not saying there should be no liability. I think it's a good thing for investor protection, but I think having that balance has always been the difficult thing to try and get to.
Fantastic.
Maybe one example how not to kill innovation with the custody, the reflex that anyone could have is to have segregation per client, because it's how we operate in traditional finance. But in the crypto world, it doesn't work. If you have dedicated wallet for each user, it costs a lot, and it doesn't bring additional security, because at the end of the day, who has the keys to move the assets? It's always the custodian. So to have the assets in a lot of wallets or in one omnibus wallet, if it's the same person that owns the key, it doesn't bring additional security. But this is how we need to fight to our first reflex, which would be to apply traditional financial regulation to crypto.
Which is going to be an interesting development to watch, which is basically whether it still makes sense to, to have, the crypto model where basically, exchanges are custodians at the same time, or we're going to eventually end up splitting both functions, as in traditional finance. Something to watch. And, and one interesting thing that's coming out of, consultation like FSB, et cetera, is this consideration of how one entity doing several activities can compound risks, and what are we going to do about that? It's going to be one of the very interesting things to watch as this develops.
Fantastic. And thank you, all of you, for your responses. I'm very conscious that we've reached time. And I think it's very obvious, just based on this 1 hour conversation that we've had, that this will be the first of many conversations around the regulatory landscape here in the UK. There's a lot to digest, there's a lot to discuss, and there's a lot to move on to implementation as well. But thank you to all three of you, Stephanie, Mark, Manuel, for taking the time and sharing your knowledge and expertise. We will be making a copy of the recording available to all the participants, so we'll be sharing details with you after the call. But thank you all for attending, thank you for your time, and thank you again to the panelists. It's been a fantastic session.
Thank you.
Good afternoon.
Thank you.